When a chart holds its ground after months of aggressive selling, it sends a message that even the strongest downtrends eventually lose momentum. That is exactly the kind of shift COAI is showing right now, and it is catching attention across the market as stability finally appears after a long period of fear. This is Shah, and today we are diving into the structure of COAI with clarity and patience. The coin we are analyzing is COAI, and the current price is around 0.51. In the previous update, we marked the support at 0.50 and the resistance at 0.60. That structure played out beautifully. The price held the support and delivered an impressive 38% pump. What makes this even more interesting is that this same reaction from the support has now happened 3 separate times, which signals that buyers continue to defend this zone with consistency. If we zoom out a bit and look at the broader picture, the drop from $30 to half a dollar was not only extreme, it was emotionally exhausting for most holders. A fall of that magnitude forces weak hands out of the market and it creates long shadows of panic. But when extreme selling starts to slow down, price action begins to move in a tighter range, and that is where new opportunities emerge. Over the last 2 weeks, Colorado AI has been moving inside a defined range between support and resistance. There have been wicks above resistance, but no daily candle has closed above 0.60. Each time price tried to push higher, aggressive selling stepped in and forced it back inside the box. However, the wicks that dip below support should not confuse anyone. Those movements happened on the 4-hour time frame, not the daily. When we look at the daily candle, Colorado AI continues to close above the 0.50 support, which shows that real strength still exists here. Candle closes carry far more weight than random intraday wicks, and that is why the structure remains valid. Now the range is tightening. Sellers who were active above resistance are losing aggression, and buyers who defended support multiple times are still holding strong. This balance cannot continue forever. A breakout or breakdown will decide the next major phase for COAI. If it breaks above the neckline at 0.60 with a strong daily candle, then the first leg of recovery begins. That move would confirm the shift from distribution to accumulation. On the other hand, if the daily candle closes below 0.50, then the structure weakens and a deeper correction becomes possible. But based on momentum, volume patterns, and the slowdown in selling pressure, the probability still leans toward the upside. The market conditions around COAI have changed compared to the brutal 2-month decline. Buyers are active again, the range is respecting both boundaries, and the coin is no longer free falling. And keep watching how price behaves around these 2 levels, because once the breakout happens, the next strong move will be much clearer. If you enjoy these structured updates, stay connected for more steady insights.